you.
Hello and welcome to Business Incorporated live on Channels Television, the final one for the week where we'll be tracking the markets and of course the economy as well and see how that affects your pocket. Here are the stories that set your agenda.
You.
IMF approves $211 million climate financing for Leone. Ghana moves to siting control of Goldfield's biggest mine.
Yeah, straight away.
And Zimbabwe launches $17 million pipeline to unlock investments and capital inflows.
This is the last one, I mean. Q, 222. Q.
And great to have you join us again. I am Will Ibang, and as always, we get a check-in on commodities. We start with oil markets, where we see oil prices are mixed after the postponed U.S.-Iran talks. Natural gas is down. We see that 0.42%. See that price and that level of $3.21. And we also see Brent is also down 0.23%. That's what we have. And we also see West Texas, that's the U.S. West Texas Intermediate, that was up 0.1 as the last time I checked. It was trading at $76.68 a barrel. Let's check in on metals and see how that is faring, especially after the postponed Iran and U.S. talks. Gold is, however, on track for its third weekly loss as dollar continues to strengthen. Now, spot gold, that is down 1.99%. That's nearly 2% down at $4,161.20. Spot silver, that's also down over 2%, and we also see platinum down over 2% as well. Palladium is down 2.18%, trading at 1,261. Copper is also down 0.6% at $6.34. Let's look at other stories making the rounds, especially in the commodity space in Africa. Ghana is considering giving the state a bigger role in the control of Goldfield's largest mining operation as part of broader efforts to increase domestic participation in the country's gold sector. We said the discussions are centered on restructuring ownership and influence over key assets, although no final decision has been reached. Government officials say the move is aimed at ensuring Ghana captures more value from its natural resources, particularly at a time of strong global demand for gold. Goldfield has not yet publicly commented on the latest developments. The talks reflect a wider trend, however, across parts of Africa where governments are seeking greater control and higher returns from strategic mineral assets. Moving on, we see the Zimbabwe Investment and Development Agency, ZIDA, has unveiled a $17 million investment pipeline, and that's targeting key sectors of the economy. And the pipeline focuses on areas including energy, agriculture, mining, manufacturing, tourism, and infrastructure. And that's part of efforts to accelerate capital inflows and unlock stalled projects. ZIDA says the initiative is designed to bridge the gap between the project approval and actual implementation, which has slowed investment delivery in recent years. The agency adds that it will improve coordination between investors and government departments while fast-tracking regulatory approvals to ensure quicker execution of deals. Officials also say the goal is to convert more signed commitments into on-the-ground investments that support economic growth and job creation. We see Sierra Leone has secured funding. The International Monetary Fund has approved about $211 million in new financing for the country to support climate resilience and economic stability. The funding is aimed at helping the country better prepare for climate-related shocks while strengthening long-term fiscal and environmental reforms. The IMF says the package is part of wider efforts to support vulnerable economies facing rising climate risks. Now, the approval comes alongside ongoing IMF-backed programs in Sierra Leone focused on economic reform and debt sustainability. And finally, we see Kenya has also secured a $1.2 million loan to expand its main international airport. It's seeking lenders to do that. And then the government says it's working with the Trade and Development Bank and the Africa Finance Corporation to arrange about that amount of about $1.2 billion for the project. Now, the funds are expected to support upgrades and expansion works at the airport as Kenya moves to strengthen aviation capacity and position Nairobi as a regional hub. And let's get a quick check-in on equities now. We'll see how they're trading, especially in intraday. We see major stocks. Egypt is closed, but they're kicking off Friday in the red. We see the NGX is down 0.36%. That's really continuing the bearish trading we've been seeing all week. We see South Africa is also in the red. EGX 30 I mentioned, that is closed. Kenya for Thursday is closed in negative territory. But let's get a deeper dive what's happening behind the scenes on the NGX. And we have Abdulrasheed Momo, Executive Director Operations at TRW Stockbrokers, joining us to discuss this and breaking down. Good afternoon, Abdulrasheed. It's good to have you join us.
Good afternoon.
Abdulrasheed, is there an end to this correction? It's just going downhill from where we started. We don't even remember when. But where is the market really heading right now?
Nobody is talking when the market was going up. Everybody seems to be interested like when the market is coming down. For every up, there will always be a down. So people should not panic. It's just a correction. And the market seems to be coming, the correction seems to be coming in the same period when the Dangote refinery actually did their private placement. So a lot of funds have actually left the market.
Okay, so that's what we're seeing in the red in the market. But let's look at other news now. So is there an end to, you see in the horizon where the market will probably see reset itself and go back into green territory? Can you tell us that?
Yeah, well, if you look at the numbers, in terms of charts, what I said about that, when the bears for June are really coming very, very strong, because 4 days rally has wiped up the whole of May. All what May fought for in 4 days, they're all out. We're looking at, give or take, we'll be pointing at, let's say, about 230,000 points.
Wow,
that's for another strong support level.
Well, that's really low, but we hope that also bounce back to where we are headed.
No, but take note. You need to know that most of the quoted companies, at least let's say 95% of them, their financials are really still good. You understand? But I mean, once in a while, people need to take profit. And I said one of the key reasons here has been the Dangote refinery,
private placement.
Yeah, so definitely. And you know, the public offer is going to come up, so we should expect more corrections.
Wow.
But as we said, we always have two players in the market, the investor and the trader. So for the investor, it's still a good market. For the trader that buys low and sells high is actually the one in the panic mode now, because at the end of the year, we are still going to see increased dividend payouts and everything. It's going to be more of better yields for the market.
Okay, so
the long run.
Okay, so right now we just have on the screen now, you see the NGX has set new rules that's going to determine how much volume of shares can be traded on the exchange before it can trigger a price change. What are your thoughts on this very quickly before we go into what this means or the implication of it?
Okay, breakdown now, minimum 10,000 shares. This one is going to be heavy because these rules have actually, it has really helped the market for some time, because the big players, if you don't see 100,000, the market is going to move. But with this new rule, we're going to see a lot of volatility is going to happen in the market, which means that if the price wants to drop immediately based on 10,000 units, let's have the kill once and for all, and the rebound comes immediately. Because with this current movement now, you can see that a lot of big stocks like Seplat, Airtel, a lot of big names are not really affected, because without 100,000, you cannot move those share prices. And most of them, as you speak, they are mainly on full offers, but because of the kind of current price and what you need to move them, they cannot move.
Okay, but
so that means.
Right now, what we have is that prices, stocks that are 1,000 naira and above, they need about a minimum of 10,000 shares that must be traded before the price moves. So what does that mean? Before
it was 100,000 across the board.
Okay.
So it favored it favored them. It protects them.
It protected the defensive stocks, the big stocks. So right now the big stocks are no longer protected. Is that what you're saying?
Yes, with this, that creates a lot of volatility in the market.
Okay. So
Yeah.
the stocks that are below 500 naira, they need a minimum of 100,000 for there to see a movement in their
That's the
share
old
price.
rule across the board, every stock. So it favored them more.
Okay.
But these smaller stocks, you can see a lot of volatility going through. As we speak, you see some stocks now, like Seplat, you understand? Seplat is trading, let's check Seplat.
Because I was going to
Hold
ask,
on.
how is that impacting volume trading in the markets? Is there a new strategy investors are now adopting to be able to, maybe walk around these new rules to ensure that maybe their stocks are not going to lose value?
Okay, like Seplat is trading about 11,363, but the market price is 10,227. So you need to trade 10,000 units of with this rule, but the old rule, with this new rule, if you trade 10,000, then there's going to be a movement on
In the
Seplat.
price.
So as it is, I'm buying Seplat at 10,000, the market will still close at 11,000 because I can't do 100,000 units, which is huge volume. That means no one is going to escape, but it will create volatility in the long term. You'll be able to, if it drops, people will be able to get in the stock and buy back at a lower price.
That's a good one for people who want to enter the market. So it's a good thing in the market. This new rule is not a bad thing. Volatility is a good time because you have a good entry and exit points for stocks. So it creates that flexibility. So let's just look at it now. How do you see the markets probably closing today? I know that we're already in the red. But is there anything happening on the exchange, maybe you're seeing behind the scenes, that could flip and make a turnaround for stocks?
Okay, well, the market is down by 0.25, that's 583.72 as we speak. Most of the indexes, except from NGX oil and gas, that is in green. If you look at in terms of where the money, it's still, we are seeing, we traded about 2.6 billion naira worth of MTN and Zenith. But if you look at the top trades, people are still in the banking sector. That's where we see most of the volumes and value in terms of trades for today.
Okay, so I just want to ask quickly, just about the CBN new holdco rules. I know July 9th, the stakeholders are going to meet to discuss that new capital threshold of 51% for holdcos. How do you see, what's your expectation? I just want to get from you.
Sorry, for which
for
one?
For the CBN new threshold, the capital requirement for holdcos, the new rules they've set for them.
Okay.
The 51% that holdcos now have to have as capital reserve to strengthen their subsidiaries or strengthen the whole company or conglomerate as a whole. What do you think about it? Come July 9, what do you see as the outcome of that meeting?
Well, I wouldn't want to say much about that for now. What we are seeing basically is actually affecting the overall market as we speak. And when it comes to fundamental news and data, my strength is always in terms of data. And why I'm saying that is that the market has a cycle. And it seems that most of this news, whether good or bad, actually starts to affect the market in the period of June and July. August is always one of the worst period hit. What I'm saying is that there's this argument who say sell in May and go away, but we start seeing over the years, we start seeing that effect happens in the month of June. And July does not outperform June. So we're going to see some of this, what is being said, we're going to see some of these corrections taking place till about August. I'm not saying the market is going to be down, but I know that at the end of from August, most of these losses will be likely going to be recovered towards December and the beginning of the first quarter of next year.
Well, definitely, that's a long wait. Is that supposed to be?
No. See, there's nothing you need to know about the market. It cannot be up all the time.
Definitely.
And these corrections are very healthy for the market. So even if you think you've lost out, you have not lost out for an investor because you have not sold. But for traders, I mean that they are the ones getting their figures burnt. All for me, 95 of these quoted companies, as I said, their financials are still very strong. So we should watch out.
Definitely. We'll keep tracking that. Yeah. Thank you so much, Abdulrasheed Momo, Executive Director, Operations, TRW Stockbrokers, for sharing your perspective. It's still Friday, and markets definitely in the Middle East, where we're looking right now, are closed. Most of them are closed, except in the UAE, where we see Abu Dhabi and Dubai trading in negative territory. We see Dubai down 1.48%. Abu Dhabi is down more than 0.5%. Saudi and the Qatari indexes, they're closed for today. Let's look at the U.S. We see the markets, they're closed today for the Juneteenth. That's a day that commemorates the end of slavery in the United States. However, futures are trading in pre-market. You see Dow Jones, the Dow futures was down 0.27%, S&P futures down 0.37%, Nasdaq futures down 0.49%. Let's look at Asia markets now. We see Japan's Nikkei, that rose to 0.28% to close at 71,250 points, and that was after hitting that record high on Thursday. South Korea's Kospi, however, that dropped 0.13%, and this is driven by reversal of gains in shares of Samsung Electronics. But Hang Seng, that's in China, they're closed. Markets in China, Hong Kong, they're closed for public holiday. It's the start of the 3-day Dragon Boat Festival. Hope to join them soon. But India, we see them trading down today at 0.64%. Let's turn to Berlin for a look at how European markets are ending the week. Deutsche Welle correspondent Chiponda Chimbelu has got his eyes on them. Chiponda, how are EU shares trading today?
Well, European stocks have been struggling today, and the Stock 600 is actually in the red, trading 0.1% lower, and Germany's DAX is flat, and that's after, of course, a rise in oil prices, which got their boost from the fact that U.S. and Iranian negotiators postponed those peace talks, which were scheduled for Saturday. Now, energy stocks, of course, have been gaining as a result, and health stocks are also trading higher here in Europe because, of course, investors are moving into sectors that are seen as safer in uncertain times. But even with that news of those U.S.-Iran peace talks stalling, the Stock 600 is on track for a second straight week of gains. And that's, of course, good news because we did see a lot of volatility, and the markets here in Europe did struggle because of that war, the Iran war. In terms of macroeconomic news, there's also some good news there, with German producer prices rising less than expected in May, and they were up 2.2% year on year. Now that is, of course, welcome news because, of course, investors have been worried that high energy costs could feed through into inflation here in Germany.
Looking at, you just mentioned the producer prices, but there's also a report from Germany that says the number of people employed in the country, in the industry, that's employment in the German industry, that fell to a 10-year low last year. How much, what do you say about that? How do you explain that? What are your takeaways, Chiponda?
Well, in terms of what's happening, according to the report, the number of people working in German industry fell to 6.6 million people last year. And that means that when compared to 2014, there were just under 1 in 5 Germans working in industry. In 2014, it was, of course, much higher. And what we've seen is that the sector's proportion in the working population has declined by 3%. And that's according to this new study, which was published by the Bertelsmann Foundation this week. And it said that the trend represents a warning sign for future employment trends, and that what is needed is a revival of labor demand in the industrial sector and greater dynamism in the labor market. Now, the number of manufacturing job postings fell significantly. So there are now fewer people who are entering manufacturing than there are those leaving it. So several major players, of course, in Germany have been several industry players have been announcing job cuts in the last 24 months. And while that has been happening, the number of workers, of course, in manufacturing has declined. But meanwhile, other sectors are actually experiencing growth.
But how do you explain this decline? Because they said the decline was driven by not by rising number of dismissals, but by employers not filling in vacancies and hiring new staff. Why is this happening?
Well, what is happening is, of course, that those high energy costs, also the lack of structural reform here in Germany, And then, of course, there's also other issues like bureaucracy, German red tape, which have added to the employment trends that we are seeing in industry, because of course industry has been especially hard hit by energy costs, especially following the full-scale invasion of Ukraine, when Europe decided to switch to other energy suppliers. That is what really hurt German industry in particular. But the downward trend that we have been seeing actually only affects certain parts of manufacturing, and that includes raw material extraction or metal processing. So the steel industry, which is of course highly energy intensive, is one example there. But there are other industry jobs, Will, that require complex and technical knowledge. And those types of jobs, which of course include mechanical, electrical, and energy engineering, now those jobs are actually in high demand. And the demands for those are, of course, increasing because of the digital and ecological transformation. But there was also another worrying trend for industry jobs, because wages in the sector rose at a significantly slower pace than in other industries. So the wage advantage of working in manufacturing, which has always been sort of an advantage here in Germany, that has halved. And that looks even worse for entry-level jobs, which of course reflects a wider trend here in Germany, where overall we are seeing that younger people in particular are struggling to find jobs, even those with a university degree.
It's quite alarming, Chiponda. I hope you keep an eye on it and keep us updated about that development. So thank you so much. It's always good to talk to you, Chiponda. Oh, have a good weekend.
Likewise.
So let's just quickly look at what's happening in crypto. I don't know, is it red? Is it green? Just having a heat map there, just like, oh, bloody red. Yeah, very red. And we see it down 2.5%, $62, it's 801,000. And we see Ethereum also in the red, BNB in the red, XMP, Solana, all those, they're all in the red. So it's not a very good day for crypto markets, especially now that we're seeing the Ethereum Foundation is facing another leadership exit. But that is also possibly what's happening to Ethereum and dragging that price down. But we'll keep an eye out on the markets and see how they're performing for next week. But that's all we have for today, and a wrap on Business Incorporated. I am Will Ibong. Thanks for watching, and bye for now.